Hey guys, what's up? Alec back with the daily stock market, and today we're going to be talking about a few different things. But I want to make majority of this video about a stock market crash because a lot of people have been asking me, should I pull my money out? Should I keep investing in the stock market? I think a crash is coming. And a lot of people have been talking about that they've been hearing a lot about a crash. So I kind of want to just go over my thoughts on a stock market crash, where we're at right now, and what I think is going to happen, and what we can do to kind of prepare ourselves for this if a worst case scenario does happen and a crash does happen. And first, you kind of have to define what a crash is. Some people think if it goes down 1%, it's a crash, like what we'll get into, that the Dow Jones has only gone down like 1% this week, and I'm only down 0.6% this week, and people are freaking out about a crash already. But a crash is more of a 10%, 20%, or even really a 30% fall in the Dow Jones, the NASDAQ, and some of these bigger things too. You can also look at the housing crash and base the crash off that, but this is going to be more about the stock market in general. And we're going to also talk about Cathie Woods and what Cathie Woods had to say about the stock market crash, because she actually spoke about it too. So if you guys haven't seen that video, I'd probably recommend watching that one as well, even though we will recap most of what she said. So today we did bounce back. There was a lot of green in the stock market today, but what you'll see is I was almost up about $500 at one point at 8:40 a.m. and then it kind of sold off a little bit, and now we're hovering right about a $200 gain. In the week, we are down 0.6%, but that's okay because in the month we're still up 12%. So you can't forget what's happened in the past, and just because the stock market goes down a little bit doesn't mean a crash is coming. Now, if we look in the last 3 months, we've actually seen moments where it was flat, and we've seen bigger dips in the past 3 months than we actually saw this week. Now, if we pull up the Dow Jones, which a lot of you guys should be looking at the Dow Jones every single day, it's at $31,494 currently, right? It started the week at 41,420, and it ended the week a little bit up. So in reality, how could we have a crash if the Dow Jones has been going up in the last week? It didn't even go down. This is where everyone freaked out, where we saw this roller coaster fall here. And it only went from 31,600 down to 31,300. So it didn't even fall an enormous amount. It only fell like $300. And then the next day it rose $300. So the biggest thing with the stock market is don't panic. Do not panic. And I'm going to teach you a trick towards the end of this video on how not to panic and how to always be prepared for a crash and worst case scenarios. Now, in the last 6 months, so look, this is when everyone was first talking about a crash, was right around August and September. We were up to 29,000 on the Dow Jones. And then in just the span of a few weeks, it went down about $3,000, guys. So remember, the dip we just talked about is right here. It went down like $300, right? So we saw a big $3,000 dip in the Dow Jones, which is not abnormal. And then it went back up. We were back to 28,000 and nobody thought about the dip again, and everyone forgot about it. But then what happened a few days later, it actually went back down to 26,500. So this is when a lot of people were making videos about dips and saying, take all your money out of the stock market, the dip is coming. And this was right around October, if you guys remember it, and you've been in the stock market that long. But what happened? A lot of people were taking out money, and then a day later or a week later, it went from 26,000 all the way to 29,000 in the span of 2 weeks, right? So we had a huge stock market rally for 2 weeks, and then it's been rallying ever since, rally. And then just recently, January 21st, you probably remember people talking about a dip again because it went from 31,000 all the way down to 29,000, which is a $2,000 drop in the Dow Jones, which is very important when you're talking about a dip, because the Dow Jones and the NASDAQ, which I'm sure you guys have heard about, are the two things that people really base it off of. Now, after it went down to 30,000, 29,000, it rallied to where we are at today, 31,000. And then it took a little bit of a dip, it literally took a $300 dip this week. Not a 2,000, not a 3,000 like we've seen in the past dip. It took a $300 dip this week, and everyone starts freaking out. So we're going to get into like these new investors. We're getting a lot of new investors in the market, and a lot of these new investors are searching for like and thinking that the stock market just goes up in a straight line 24/7, and nothing will ever stop it, and the stock market is only supposed to go up, and they're supposed to get 1,000% gains every time they trade. They're supposed to get 100% gains on every single trade. So if we look in the past, we see dips in the stock market all the time, 26 to 23, and then another dip right here. And then this was the big dip. This is an actual crash from 29,000 all of the way down to 19,000, guys. That's about a $10,000 crash in just a span of a few weeks. I think we'll see another dip, another crash like we saw in February and March. No, I don't think so. That was a once in 100-year event with the whole shutdown, pandemic, businesses closing, nationwide shutdown going on. And do I think we'll see a dip like this right here that we saw in? Yeah, I do think that we'll see a dip like we saw in 2018 where it went from 26,000 all the way to 24,000, 23,000. That's a $3,000 dip in the span of just a month or 2 months or 3 months. And what I want to say about this new investor, this meme stock investor, this hype investor, is people are addicted to feeling like they need to make money on a stock in 1 to 2 weeks. And if the market goes down for a few weeks at a time, which definitely will happen, it will cause a lot of newer investors to sell, 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 sell. Even when we saw a $300 dip in the market this week, which was, I think, Thursday, people were panicking, and it was barely even a dip. We're going to see a lot worse in the upcoming months. People don't have hands of steel anymore. They don't have diamond hands, and you see less and less people being long-term investors. Lots of pump and dumps and hype investing is going on right now. And a pump and dump is best described as a smaller market cap company that can be manipulated very easily by mass or mob investing. Someone who mentions a smaller stock with a market cap of 50 million or even 200 million, and their audience, even though they don't know anything about it and they don't know the financials of the company, they don't even know what the company does or what they sell, and they just flood to it and flood money into it. And when a mass of hundreds or even millions of people flood money into a stock with a market cap of only 25 million, it can easily manipulate the price and cause a pump and dump scenario. And another issue I do see is everyone's looking for the next Tesla stock, the next NEO stock, the next stock that's going to gain 300%, 400%, and they're going in with 80% of their portfolio value. They only have $1,000 and they're putting $800 into one stock, right? I don't have a problem investing like that if you're only using 10% of your portfolio, because this is called high risk investing. And there is a time and place for it, but if you're doing over 50% high risk investing, you might as well just go to the casino or start gambling or go to the roulette table at that point. Now let's kind of go over what Cathie Wood was saying about a possible stock market crash in one of her videos. She was actually afraid that Joe Biden was raising taxes and corporate taxes are going to be going up. And she was also saying that the feds might raise interest rates sooner than 2023. And rates are actually raising right now, as you guys see. She is saying that if this happens sooner and they raise interest rates very high on real estate, for example, and she was saying that they could raise rates as soon as this year. And in my opinion, if they raise rates dramatically, we can see maybe a 10 or 20% correction in the market. Now, 20% of money in America was created in 2020, so let's not forget about that. I think it's actually closer to 30% of all the money that's in America right now was created in 2020. So let that sink in and really rewind it and absorb what that means. 25% of all the money was printed last year. And Cathie Wood continued to say that bonds are bad, downtrend with oil, EVs are the sector to be in for the next years, right? So she was saying it's moving away from oil and that kind of energy, the fossil fuel energy that we've had in the past, and it's going to be a green wave, and EVs are the sector to be in. She's also talking about genomics are the sector to be in. If you guys know BNGO or CRISPR, she's talking about those stocks, and she's added a lot of money into those specific stocks. She also said that if the dollar keeps weakening, which it will be with all the money that's being printed, that Bitcoin could go up and crypto can continue to go up as the dollar weakens, right? So keep that in mind. She's a huge, huge Bitcoin bull, and she's has a lot of money in Bitcoin. And she's even compared Bitcoin to the almighty Tesla, on where she's made a lot of her fortune and was one of the biggest bulls on Tesla back in the day. She also said that we'll go through corrections at some point this year. It's definitely going to happen, but corrections are not the same thing as a crash. Like I was saying before, we'll see corrections, but we probably won't see a huge, huge crash like we did in February and March 2020. And she was also saying it never hurts to take profits now and pick up some sweet deals when they become available in the future. So, for example, if you're up 100% or 200% or even 80% on a stock, take some profits on it. And then once it dips and corrects, which, Kathy Wood, she was saying it's inevitable for a correction to be coming this year. So you can only take some profit. She was saying it doesn't hurt to just take you don't have to sell your entire position 100%, but you can sell maybe 20, 30% of your position, or pick up some awesome companies that you've been wanting to get in for a while, maybe like Amazon or Apple, for example, or even Tesla, as the deals come and fire sales start happening. Now, most of you guys know Kathy Wood, and you guys know her ETF, ARK, ARKK, one of the best ETFs in the whole stock market, one of the fastest growing ETFs in the whole stock market. And if you're investing into ARK ETFs, you should definitely have the same mindset as Kathy Woods, which, if you guys don't know, everything she does is a 5-year mindset. So you can't have like a short term, oh, I'm going to swing trade it 6 months, 3 months. Everything she does is thought about in the next 5 years, and she's going to be holding it for a significant amount of time. She's one of the great long-term investors. Now let's go over some of my final thoughts on what's happening and what we need to see to actually see some positive growth in the future and continue. So right now, I think there's a Band-Aid wrapped around the economy, and I think we would have saw a crash already if we weren't pumped with stimulus money. We need more stimulus. So I know more stimulus is coming. Joe Biden is going to be helping us out with that. We need to see more vaccines coming, which a lot of doses, new contracts are being picked up every day, which is momentum in the right direction. We need to see economies fully opening and reopening, which we are seeing positive direction. California is getting better. Florida acts like it doesn't even exist. So we need to see no shutdowns. We need to see low interest rates, right? We need to see low interest rates continued. If we see interest rates climbing, that's a bad thing for the stock market. And we needed to see no fear. No fear is a big thing. So people afraid to leave their house, people afraid to travel, people afraid to spend money, people afraid that they're not going to have a job. We need no fear in the market, and this will go a long, long way for us, and it'll cause the stock market to be very bullish. Now, some other things to note is the NASDAQ is up over 75% in the last 2 years, guys, which is absolutely bonkers. NASDAQ up over 75% last 2 years. Last time NASDAQ did this well, it was the great tech bubble. 3 years of losses after NASDAQ did this well last time. Amazon went down 90% after the first tech bubble. Can you imagine that? Amazon going down 90%? But obviously it wasn't the company it is today, and Amazon will never ever go down 90%. Probably won't even go down 30% ever again. I personally don't think that we'll see a repeat of the tech bubble anytime soon. Also, if you guys notice, PE ratios and forward PE ratios on large cap companies are the highest they've ever been in the last 20 years. In the last 20 years, the PE ratios are the highest they've ever been, especially forward PE ratios. And when you're looking at a forward PE ratio, that implies the stocks are overvalued, when you're looking at the forward. So last time we had forward PE ratios as high as they are right now, again, it was the tech bubble. Last time the PE ratios, last time the NASDAQ was this high. Lots of stocks are ripoffs. You should be very, very selective right now with your buying. And in this kind of market, you shouldn't be afraid of a crash. The thing you should be doing is being very selective of your stocks, first of all. And the second thing is staying cash heavy, right? So staying cash heavy means that you want to have 20 to 30% of cash on hand and ready to buy in the stock market for when we see the pullbacks happening so we can get some good deals on stocks. So those are the two best things to do in the kind of market that we're in currently, being very selective on the stocks that you're buying into right now and staying extremely cash heavy, anywhere from 20 to 30%. Now let's go into Tesla a little bit and my kind of mindset on them. I don't think we'll see much growth out of Tesla in the next 1 to 2 years as far as the stock price is concerned, and maybe even a possible downtrend, hopefully. Tesla is a 5 year mindset, and if you're buying for long term for Tesla, you better hold on to that stock with diamond hands for 5 years or longer. And you shouldn't be worried about a 1 to 2 year downtrend if you're in Tesla, because over the next 5 years, they're going to be absolutely crushing it. Microsoft, Apple, Amazon, I'm thinking probably the same thing for these companies as we just talked about with Tesla also. And we talked about Biden's new tax policy that could hurt the market by taxing rich people, and rich people control the stock market. Do not forget this. So if you're a stock market investor, you do not want to see rich people getting taxed more, because honestly, that will hurt the stock market. They're also talking about raising capital gains taxes. And if you guys don't know what capital gains tax is, you definitely should. When you're investing in the stock market, you remember you have to pay taxes on your stock market investment. And if you hold it for longer than 12 months, you pay an extremely less amount. If you hold it for less than 12 months, if you hold your stock for 2 months, 3 months, 6 months, 8 months, anything under 12 months, you get taxed at a higher percent. It's actually the same as your income tax. If you hold it for 12 months or longer, you get a special tax rate. It's called capital gains. So you might want to look into capital gains. But there's been talk about Joe Biden raising capital gains taxes so people wouldn't be incentivized to hold long term, and there would be a lot more short term sellers, and selling leads to more selling, causing the market to downtrend. Also, corporate taxes are projected to go up to 28%. That's not official. It's just what's being talked about right now, but that could bring fear. And remember, we don't want fear in the market. Some analysts are saying the market will surge 25% in 2021. Take this with a grain of salt, because there are a lot of analysts that are bullish. So take it with a grain of salt. But analysts, are important in the market, and some of them are even saying 25% surge in 2021. So get ready for it. If we start seeing red, I'll keep you guys updated with put options also. So put options is going to be a great way to continue to make money in the stock market if we actually do see a crash coming. So keep in mind, there's more ways to make money in the market than it just soaring and soaring and going up and up. If it goes down and down and down, we can make just as much money still. Keep in mind, the stock market is up 15% in the last year, probably even more, honestly. Yet our economy has one of the worst years in history. 2020 was one of the worst years for our economy, yet the stock market surged. Interest rates on savings account are basically non-existent. So remember, usually you'll get actually some interest. Like I think at one point it was 2% interest on savings accounts, and now it's down to like 0.003. So they're basically non-existent right now. People have stopped spending money on entertainment, like movies, AMC. There's AMC shut down. Concerts are still shut down. So when I talk about we need a full reopening, we need all this stuff: movies, concerts, sports games. Sports games are shut down. People don't buy the jerseys as much. DraftKings is being hurt a little bit by this because there's not as much gambling. Flights, flights aren't at full capacity right now. Cruises are absolutely shut down. There is zero revenue on cruises right now. Amusement parks are shut down. Comedy shows are shut down, leaving more and more people to put money into the stock market. Since they're not spending money on all the things we just talked about, what are people doing? They're spending it in the stock market, is why we've seen it surge and surge and surge. And I want to ask you guys a question. So I want to leave you guys with this question: is how would you react if the market went down 10 to 20%, right? So how would you react? Would you be okay with buying more stocks and getting great deals? Or will you freak out and pull out your money when your stocks are at an all-time low and lose money? It happened several times in the past, and a lot of people have done it before. Panic selling. There's even a name for it. Panic, 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 sell, sell, sell. Are you going to be one of those people, or are you going to be buying in during the dip, which all the great investors do, buy during dips? Honestly, we need to see red, in my opinion, for a healthy stock market. It just can't go up and up and up forever and in a straight line. We need to see some red days. So if we see some red days, you can picture me as a happy camper that's going to be spending more money in the stock market than I spent in the last 6 months. If we see another crazy year where the stock market just goes up and up and up, I'd want to be around 50 to maybe even 60% in cash. And I've never ever been that cash heavy. Typically, I'm only like 10 to 20, maybe 30% in cash. If you don't have 20 to 30% in cash right now, it could be a great idea to start taking some profits off the table and with stocks that you're absolutely rich in. If you're up 80%, like we talked about in the beginning of the video, and you don't have 20 to 30% in cash, it might be a good idea. Also, I want to ask you guys, was this your first year in the stock market? Do you have the skills? Do you guys know what it means to be a stock market investor? Do you guys know portfolio diversity, business identity, competitor comparison, position sizing, how to determine a good CEO from a bad CEO, valuations, PE ratios, how to read a balance sheet, income statements? Do you guys even know how to read charts and graphs, or learning technical analysis versus fundamental analysis, value and growth investing, cash flow, income statement, stats, dividends, compounding interest, ETFs, options, price alerts? And do you guys know what any of this stuff is? Have you guys been learning this stuff? Do you know what most of that stuff is? Or have you kind of just been throwing money into stocks that you heard are going to be good? That's the difference between a stock market investor and a beginner kind of gambler into the stock market. You need to know these things, and it can cost yourself a lot of money by not knowing them. So if this is the year that you want to take stock market investing serious, go ahead and reach out to me in the DMs. We have now helped over 600 people in my course. I'm so happy to say it, guys. We have such a strong following. And if you guys want to see over 150 student testimonials, go to my highlights on my stock market page right here, and you can see over 150 testimonials. And if you want to read through some of them, just wanted to let you know, because I've mentioned Bank of America, I've been putting a lot of money in it, made a lot of money from it. And you can go and read these yourself. There's unlimited of them. There's 150. There's a lot of them. And student success, and then student success number 2 is the second one. It's more recent. So thanks. And I also forgot to say thank you for your program. You made it easy for me to understand and literally made my money back the same day. Look at that, guys. Over 30% on my first round go. Thank you. This guy's up over 19% in the last month. And he said, just by following your instructions and zero effort. Thanks, man. And it just keeps going on. This was only a few of them. This guy's up over 20%, $600. Bro, since I joined your program, it's been nothing but straight gains. Program paid for itself and more. You're the man. So if you actually want to learn to become a stock market investor, we go over all of those things we talked about. So you're not just following someone, you're also learning for yourself on how to become a great investor too. And a lot of people in the first day, they'll learn so much just even in the first day that they've been realizing all the rookie and beginner mistakes that they've been making the whole time. So guys, reach out to me in the DMs. I actually just closed, unfortunately, my program, but the good thing is I'm opening it up next month. So reach out to me in the DMs. I'm starting a list right now. It's a wait list. And when I open back up, if you're on the wait list, you'll be the first person to get back in on my program. So DM me now to get on the wait list, and we'll open it up next month for signups too. I hope you guys did like that video. I've been getting so many comments about make a stock market crash video. So I really wanted to dive in deep for you and go over some different thoughts of mine. We went over Kathy Woods on what she even said, so you don't have to watch the full hour-long video yourself. I kind of recapped some of her most important points, and we went over a bunch of different things, how you can personally be prepared at all times. Make sure you do share this video with a friend that is concerned about the stock market crash, kind of to ease their mind and how to prepare them the right way. Comment on this video, and don't forget to actually subscribe on YouTube, is where these full-length videos are. Comment below on what you guys want to see in the next video or what stock you want to see in the next video. And I'll see you guys in the next one. Remember, don't time the market, buy the market. Peace.